What's going on, guys? Back with another video here. Today we're going to be talking about what LEAPS are, a couple other basic things here just to cover before we really dive into buying, exiting, and diagonal spreads on LEAPS. So without any further ado, how LEAPS differ from other options. Kind of common sense stuff here, but not all ticker symbols offer LEAPS contracts. If you look, I'm probably not going to be able to find any right off the bat here. AMD has LEAPS. All the big tech names have LEAPS. Smaller stocks in sectors that have heated up lately also will offer LEAPS. Things that become super popular that you see like trending over and over, headlines about them, those will start to generate LEAPS. And like I said, the bigger names, I mean, Baba has LEAPS, of course, Nvidia. I mean, any bigger stock name, X, LEAPS here. I'm not going to search all day and try and find one that doesn't have LEAPS, but you won't find it on all ticker symbols. So that is the takeaway from this. Now, trading versus investing, there is a big difference, especially when it comes to LEAPS. LEAPS can be used by both traders and investors. At first glance, it may seem more useful for investors to use LEAPS because, more of a kind of long-term mindset. However, that is not true. I myself am a trader. I love LEAPS. It's a great way to just keep yourself from burning through cash that you have just sitting in your account, and you're getting a nice return on it, especially companies that you're very bullish on. As most of you know, I am very bullish on Apple. I love Apple, and so I do hold a lot of Apple LEAPS. Now, the trader who would choose LEAPS over shorter dated calls does so because he's expecting the move up, but he doesn't know exactly when it might happen. So he buys a little bit more time, and they will essentially capture that run up, but they have plenty of time left on their contracts. Let's get into buying. What LEAPS should you buy? Now, in the last lesson, we talked about a very useful tool here, the options profit calculator. Now, I usually look at this prior to purchasing LEAPS just to get an idea of what I'm going to be looking at. Let's select an option here. Let's look at the 2019 200. Oh, except I did that at the ask. When you're using this tool, good tip, always select the mid price. Sometimes I just default to the ask, and that doesn't give me a super accurate picture. So I'll go to the mid price, agree to this stupid thing, calculate. All right, you got your break-even curve. I mean, I went over this in the last video, so I'm not going to spend too much time on it, but I'll do a lot of looking. I like to do it after hours or before market opens, just so the stock price isn't moving on me when I'm checking this out. But I'm always looking. I mean, look, if Apple hits 180 by April 18th on this particular LEAPS contract, you're looking at a 77.5 gain. That is massive, especially for a contract that's going to cost you $463. So definitely something to explore before you develop a large position with LEAPS. Now, tying into that, I practice dollar cost averaging when I'm purchasing LEAPS. So let's say, hypothetically, you have $10,000 you want to spend on your LEAPS position, right? I would look at on a down day. Now, I always buy LEAPS on a down day. That's just common sense. I would look at buying, and sometimes it doesn't show enough strikes, but I'd look at, let's see, January 2019. I'd look at picking up maybe 2 or 3 200s today, right? Next down day, I'll pick up maybe one or two 180s. Next down day, I'll pick one up at the money. So what this does is it spreads your risk around, and you have money spread around in different strikes. So they're going to have, the Greeks will be different, and they're going to increase at different rates. If the stock continues to dip, you're not going to feel it as much on some of the contracts as you will on others. It's a great way to really get a nice average going for your overall LEAPS position. So highly recommend dollar cost averaging. If you don't have that kind of capital to spend on LEAPS, no problem. Wait for whatever company you're looking at to be down significantly, maybe $2 to $3, depending on how much the underlying stock is, and purchase on that day. I would suggest, depending on how much capital you have, of course, purchasing, one at a time, just because they are more expensive, obviously. And so you don't want to buy your whole position and then have it dip more on you. So you want to kind of leg in. You want to just take one step into the LEAPS, and then as it continues to dip, if it does, then you buy more, or if it rises, then you wait for the next down day. Really good practice when it comes to establishing a LEAPS position. Out of the money options are best suited if you're expecting a significant run up in a short amount of time. The options profit calculator will show you that out of the money LEAPS, as you should already know, with a quick run up are going to be the most beneficial. Otherwise, if you're not expecting like a huge run up in a short amount of time, an at the money or an in the money LEAP would be good as well. Now, when it comes to exiting LEAPS, do you personally like to follow a percentage rule? Or are you doing technical analysis on the underlying stock to determine when to exit? So let's say you're doing your technical analysis on Apple. I'm just going with hypothetical things here. You do your technical analysis and you suspect that Apple's going to run up to 180 within the next few weeks. You buy your LEAPS, or few months, whatever it is. You purchase your LEAPS today. It hits 180. Your LEAPS are up 50, 60, 70%, whatever it is, maybe more than 100%. There's just a hypothetical example. Don't close them out. Wait until your technical analysis, whatever your price target is reached. And if you're uncomfortable with that, then set a trailing stop on the position or close out half, maybe let the other half run. But remember, stick to your trade plan. So if your trade plan was to purchase the LEAPS and wait for the underlying stock to get to a certain price, that is your trade plan. Don't close it out because you have such a significant gain. Now, again, I am a huge advocate of taking risk off the table and taking the money as you have it, but I also am a huge advocate of following your trade plan. So I do get a lot of questions about exiting LEAPS and when it should be done, and I always refer people back to, okay, do you want to leave this money on the table? What was your trade plan? It's definitely something to think about. In this case, setting a trailing stop can always be a good choice. That way you capture the run up, but if it decides to dip, you close out. Never hesitate to close out a position just because it has a ton of time left. Do not hesitate to close out just because it has a ton of time left. You can always reevaluate down the road. So one other item I wanted to talk about when it comes to LEAPS is diagonal spreads. Now, this is very similar to covered calls, the strategy we talked about a long time ago. This actually acts as like a covered right in disguise, because you don't buy the underlying, you use LEAPS as your underlying. So basically what you would do is you would purchase, your 2020, let's say you bought an at the money, pretty expensive, $24.90. Your broker should, if you bought 1, 2, or 3, let's say you bought 2. So your broker, depending on who you have and what your rules are and everything, your broker should allow you to sell 2 contracts against your LEAPS. closer expiration. So this is known as a diagonal spread. So let's say we bought those at the money, and they were $24.90. We'll just say we got them at $24.50, whatever, 2 contracts, and then for next week expiration, we sold 2 170 contracts against it for 80 cents. And we would hope that Apple does not run above 170, so you would capture the premium of the $1.60, and that would basically be like quote unquote free money. Again, very similar to covered calls. However, usually less capital is needed when you use LEAPS instead of actual shares. This is a little, not really a secret, but I don't think it's widely known by a lot of people in the trading community, or it's not thought about really that frequently. So something to explore if you want to go long term on a certain company like Apple, like Nvidia, Baba, whatever it is, but you want to capture some premium while you hold this position. I do it from time to time. It's not a big focus of mine, but it is something that I do enjoy doing. So something to think about as you go forward with your LEAPS purchase. Any other items I wanted to cover here? I think that's about it when it comes to LEAPS. If you guys have any questions, as usual, feel free to reach out, DM, email, whatever it is. I'm very responsive. So I will see you guys in the next lesson. We're going to be talking about professional market psychology analysis techniques. So what do the pros do when they're analyzing the market in terms of psychology, and what you can do to either piggyback on that or counter it. All right. Thank you.